My next guest says that gold stocks are perhaps some of the best buying opportunities he's seen in the past 30 years. Joining me now on the sidelines of the Beaver Creek Precious Metal Summit is Adrian Day of Adrian Day Asset Management. Adrian, welcome back.
Well, thank you. Nice to be here.
Are you sticking to that? Still looking good for you?
Oh, I think so, absolutely. I mean, when I say they're the best opportunity for 30 years, we're not talking about today or yesterday or tomorrow. We're talking about, you know, this month, last month.
Yeah.
I think they're incredible buys. I mean, when you look at price, of course, is not the most important thing, but when you look at the gold stocks in terms of price, many of them are back to where they were in 2001, 2002 at the beginning of this bull market. In terms of valuation, we're certainly in the lower quartile on valuations that we've been historically. And relative to other assets, relative to the stock market, relative to the bull market, you know, bond market, we're at 30, 50-year lows. So yeah, I'm sticking to that. I think the gold stocks are very, very strong buys right now.
Right now, are you liking the juniors, the mid-tiers, the major players here?
Well, you know, our friend Rick Rule says, don't buy hamburger when the fillet's on sale. Right. I think the problem in the mining business is figuring out what the fillet is. Right. Because frankly, size doesn't necessarily equal quality.
I agree.
So
right.
At this point, I would certainly, because everything is cheap, I would certainly be focusing on what I regard as the better quality companies, including the larger companies, even if some of the juniors maybe look cheaper.
And Adrian, what happens if you can identify the hamburger that would potentially get bought out by the filet?
Well, that would be very nice, wouldn't it? And we do have some of those. I mean, yeah, we do have some of those, definitely. But I mean, we're buying things like Franco-Nevada. That's come off a bit. Although, frankly, because it's a $70, $80 stock, its decline looks more than it is. In percentage terms, its decline is only half what the XAU is this year. But that's come off a lot, so that's worth buying. Royal Gold is worth buying, Agnico is worth buying, Newmont is worth buying. There's a lot of big companies that I think are very good buys right now.
Ray Dalio had a recent interview where he said in this current environment it's important to get defensive as an investor. Do you agree with that? And obviously defensive means you get backed up by gold here.
Well, and he wasn't just talking about gold, of course. He was, yeah. I definitely think this is a time to be defensive. And frankly, we manage both global and gold accounts. In our global accounts, we're up at 25% cash right now, which is very high for a money manager. Now, I always tell people when they say, gosh, that's a lot, I say, we're still 75% invested. But I definitely think this is a time to be defensive. I mean, you look at what's happening in the world, first of all, and Ray Dalio was talking about that. You look at the debt levels, but you also look at where the market is. You know, we've been in this incredible bull run, and look at the valuations on some of these stocks. The stocks that are leading, Facebook and things like that, the valuations are just ridiculous.
So how long can it last, in your opinion?
Well, it can always last longer than you think it can last. But I think as a value investor, you don't mind getting out early. It can always last longer than you think. Bull markets always do. The gold market in 2010, 11, 12 lasted longer than we thought it would, and it should have done. Right. Should in quotes.
Right.
But I just think this is a time to be defensive, and we're buying physical gold. We're raising our cash levels. But just because you're being defensive, I don't think that necessarily means you avoid some of the smaller companies. You talk about a company that maybe goes from hamburger to fillet or is taken over by fillet. I mean, if a company has good, strong management, and that means a lot of things, of course, but good, strong management and ethical management, has a good, strong balance sheet as well as properties, like Evrim, for example, you know, to me, that is a good risk reward. That is not a high risk speculation.
I'm sure they'll appreciate that shout out. Oh. Well, Adrian, thank you so much for your thoughts today.
Thank you.
And thank you for watching. We'll have much more for you for the Precious Metal Summit here in Beaver Creek.